Hi there, Kar Yong here, and it's been a while since I last recorded a video to share with you my views and to update you guys on some things that's happening in the market. Well, I've been doing some live stream on my YouTube. Hopefully you're aware of it and you're following. Okay, if not, just a quick one. We do that every Monday and Thursday for our live stream. And it's been some time since I last recorded a video like that to share with you some of my opinion and analysis of the market. And I thought this video here will be a very good opportunity to touch base again with some of you. Okay, and today we're going to talk about a very specific topic with regards to the stock market, and that's about trading the IPO, right? Initial public offering. Now, if you're familiar with, or I would say you're active in the market, you do realize that today, again, depending when you're watching this video, as of this recording here, Robinhood, which is a very popular broker in the US, is actually getting listed recently. Okay, and I thought it would be a very good opportunity for me to share with you my personal opinion and my views in terms of should you be trading such companies when they are first being listed in the exchange, right? Basically, we call it trading the IPO. Okay, so I'm going to share with you my screen to walk you through some of my thought process, to show you some of the previous case studies of IPO companies, and from there hopefully I'll be able to provide you some insights and ideally, okay, to help you make a much better or informed decision as to whether you want to trade the IPOs. Okay, so without further ado, I'll show you my screen and I'll walk you through my thought process from there. Okay, so over here, what you can see is that this is actually published on the 28th of July. Okay, as of this recording, we are right now on the 29th of July. Okay, so this was actually released yesterday. And of course, Robinhood here, the title says Robinhood is valued at 32 billion after selling shares in IPO at 38. Okay, so the idea is, of course, basically it's just simply stating that Robinhood is being listed and the starting trading price is somewhere around $38. Okay, but of course when the market is open and this is finally up in the public where people are able to trade it, the price can be very, very volatile. Okay, so my personal opinion over here is that if today you're someone who are looking at very short-term trade, really speculating the price movement of such event, okay, we call it IPO trading, then you are still able to capture some profits, right? But of course, the risk is going to be slightly higher. Okay. Now, for me, as someone who is a little bit more towards, I would say, swing trades, right? Looking at longer term perspective of the company, in terms of opportunities that we're going to take trades, right? Swing trades are generally on the longer term perspective, and even towards more like long term investing. Okay. Now, if you're someone who is towards this style of trading or investing, and today you are also someone who you would say consider yourself as new towards the financial market or even the stock market, then I would strongly advise you to reconsider or even not trade the IPO, right? If today you're looking to invest into this company, okay, my suggestion here is not to invest when it was first being IPO. Okay, you want to give it some time. And what I mean by time over here as an investor, I want to at least give it about 1 to 2 years time. And the reason is very simple. Okay, as an investor, I want to be only investing in companies that are sustainable and is to a certain extent have some proven track record. Okay, and the easiest way to do it is of course through their financial statements. Okay, so why 1 to 2 years is because with that I'm being able to at least look at the financial statements for minimum 2 years, right? And I can then make a much better informed decision whether this company has potential growth or it's losing money. Okay, and not saying that losing money means the company share price can't go higher, but it becomes very speculative in nature. Okay, so that's something I want you to take note of. Okay, so having said that, I want to show you some of the previous IPO companies and why I say if today you're more towards swing trading or long-term investor, you want to just give it a good 1 to 2 years before making any decision to buy up the company or invest in the company. Okay, let me show you some case study over here. Okay, so I think one of the more popular company that recently went IPO, okay, that perhaps most of you who are watching this video will probably be aware of, okay, or know this company is called Coinbase. Okay, they are basically a crypto exchange, right, that got listed just within this year. Okay, and I want you to see, okay, I'm not just going to talk about this, I'm going to show you a couple of example and case studies, and then with that, hopefully you'll be able to see where I'm coming from. Okay, so if you take a look at Coinbase over here, since its IPO, okay, which was where the opening price is somewhere around here, around 388, which is about $400. Today, it's trading around $240, right? That's less than a year. Okay, what has happened? Price has actually dropped about close to 40%, right? To be exact, it's about 38.8%. Now, this is just one case study, right? Let me show you more. Another company that went recently public, which is also in the headline recently with China market, the Chinese government is locking down on the education sector. This company was also affected, called DIDI, okay, DIDI. Okay, and I want you to see also recently just IPO not too long back, and Chinese government started to clamp down. Where it opened was somewhere around the price point of $15.97, which is very close to $16. And as of today's trading is somewhere around here, which dropped about 40%. Okay, the lowest point was even like 55%, but as of today's market price when I'm recording this video, is about a 40% dip. Okay, so it's not something that is uncommon, right? So two case study here, these two companies are also well known. Coinbase had a drop of 40%, right? DD over here, Coinbase has a drop of about 30+%. DD over here has a drop about 40%. Okay, some other companies that recently also quite popular, I think, is Snowflake. Okay, some of you might also know about it. Okay, okay, this one here you can see, right? At the start of it, okay, if you really look at it, zoom in, right? Over here, when it first got listed, the volatility in the market is huge, right? So if I were to show you how price has moved from the high when it's open, all the way to the low here is 19 or 20%, close to 20%. Okay, and then of course it made a rally, and then after that it came back down, it made a huge rally, okay, close to 65%. You must be thinking, wow, great, right? Great returns. But if you got in at the wrong time, at the high of this, at the hype of it, you might suffer a pretty big drop as well. Okay, so let's just take a look at it from this perspective. Okay, if you actually started to buy into this company when it first listed, you are not making any money right now. Okay, however, it's not a bad sign. Okay, you're not losing money, but you need to go through that emotional cycle, right? That volatility cycle of like, wow, very happy, and then being very worried, very anxious as to what's happening. Your profits dissolve, and you kind of like had a drawdown, okay, of a good close to 30% as well during one period of time if you invested at the market price when it's first IPO. Okay, of course, okay, not all companies are like that, but I want you to see, just by looking at these three case studies, they are popular companies, okay, they are well known on social media as well. It's not uncommon to see something like that. Okay, so first up, you want to realize is that the volatility is there. Okay, it can fluctuate a lot, okay, within a very short period of time. Number two, tendency of it falling is pretty high. Okay, maybe another one I would say is Airbnb. Okay, which of course recently IPO not too far back, and then with the lockdown and everything, this company definitely is being affected. But I want you to again see, right, recent IPO companies are like that. Okay, so when it opened, you can see what happened. It instantly have about a 17% dip. Same thing, very, very volatile. From there, it made about 50% of upside. And then from there, what happened? Okay, from this high here, it actually dropped by 40%. Now, if I zoom out, okay, and assume that you actually invested somewhere when it's market open to today, you're not making any money. But same thing, you need to undergo the entire volatility cycle. Okay, so again, not uncommon thing, right? It's very common for companies when they first IPO to actually undergo such volatility. Okay, now give you some more example. Okay, example where companies today are already very well established. Okay, and it has risen by a lot of percent. Okay, companies like Facebook. Okay, today if you take a look at Facebook, it's a no-brainer that you are looking at buying it because it's a solid company. Fundamentally, it's strong financial statement. Everything is strong. Okay, the chart is also strong, right? It's an uptrend. However, if I bring you back to when they first IPO, right? That was like a good number of years back. Okay, maybe I'll bring you to the daily time frame. Okay, let's go back in time and see when they first IPO. Okay, today Facebook is like solid, right? The chart looks pretty nice, it's in an uptrend. But I want you to see before Facebook it is where it is today. Okay, back then when it first IPO, what happened? This was the opening price, somewhere around $42. It went down as much as close to 60%. Okay, in other words, okay, you might be thinking, right? If you have invested in Facebook when it was $42 today, it's so much higher. I would have made so much money. But you want to also understand during that phase, there was one instance where your investment lost 60% of it. Okay, and you want to ask yourself, are you still comfortable if that happens to your portfolio? Unlikely. Okay, so the message I'm trying to drive to you or to send across is for you to understand that companies that just IPO, they tend to have this huge volatility in. Okay, and as an investor, you might want to avoid it because it's an emotional toll to your investment journey. Okay, and the idea is people would then say, but I don't want to miss out on that opportunity, right? The FOMO side of things. And this is where I want to give you, some food for thought. Now, if today you strongly believe that this company is a very solid, fundamentally strong company that has huge potential growth in the future, okay, do you think that 5 years down the road, 10 years down the road, the stock price will keep going higher? Okay, if you truly believe that this company is sustainable, there's a potential of growth, then, okay, 5 years down the road, 10 years down the road, your conviction towards this company is still going to be there. Okay, then with that understanding, with that perspective, right, why would you be afraid of missing out? There's no need for you to be afraid, right? Give it 2 years. Okay, 2 years later, and you still invest in it, you still have that next 5 years, next 10 years, you're still going to enjoy that upside. Okay, but you do not need to undergo this kind of volatility move. Okay, and I can share with you, you can see here, how long did Facebook take, right, before it starts to clear it off. That's about 446 days. Okay, that's a good 1 year plus, right? Imagine you first invested in Facebook, that 1 year you're basically not making any money, but you're suffering that kind of emotional toll. Okay, now not only this company, right? If you really look into most of the IPO, even today companies like Apple, Google, you go back all the way and look at when they first IPO, the volatility is there. Okay, of course, there are some companies when you first IPO actually made a good profits, right? So over here, this website is basically all the companies that went IPO in 2021 this year. Okay, and of course you can sort this just by clicking on the return. You can see most of these companies as of to date is in the down, but of course there are some companies that are making good upside, right? Some of it, of course, fantastic returns. Over here, I want to bring your attention to this company called Roblox. Okay, I think this company over here, right? Roblox, RBLX. Okay, I think it's pretty common and popular in terms of this company. Some of you might probably heard about it as well. Okay, so the idea is again, there are of course companies that make money, okay, after it IPO, but look at the volatility of it. Okay, while it's currently enjoying upside, you need to undergo this kind of spike. Okay, and you want to ask yourself again, as an investor, okay, there's an instant where it went up 30%, but at the same time, there's this instant where it came back down about 20%. It went higher, and then after that, the volatility from this high back to where it is right now is about 20+%. Okay, so it's definitely going to be very volatile, especially when a company just went IPO. Okay, and the reason is because a lot of traders are actually trading it for speculative reason. Okay, for that short-term price gain, and then they start to sell it off also to profit take, sell it to bet on the price falling, and then they close their position and then they make some profits from the sell side as well. So a lot of speculative traders are taking part when a stock first IPO. Okay, so unless you are also part of them and you want to profit from this speculative nature of IPO, if today you are more towards like swing trade, as I mentioned, or even an investor looking for long-term investing into the company, then you might want to avoid this initial phase, right? To avoid the entire emotional roller coaster that you need to undergo, with the price spiking up and down. Okay, so I thought, with Robinhood being a very popular company as well that is soon to be IPO, right, depending on when you watch this. Okay, hopefully my views here through this video is able to give you some understanding, some different perspective for you to consider, okay, before you even make that decision on whether you want to buy into Robinhood when it first released into the market, or even invest into it when it first released into the market. Okay, hopefully this video helps, right? And if you enjoy it, would appreciate if you give it a thumbs up. Okay, like this video so it helps the algorithm on YouTube to reach out to more traders and investors, so that this message here can be also shared with fellow traders and investors in the market. And of course, if you have not subscribed to the channel, make sure you do that, so that in the future when I release something like that, you'll be notified as well. Okay, so that's all from me for this video. All the best for your trading investing journey. I really hope this video do help. And of course, if you have anything you'd like to share, or if you really enjoy this, share with me in the comments below what is the one point that you took away from this video, right? And of course, if you're investing and looking to trade Robinhood, do share with me your thought, your views, your analysis in the comments below as well. Okay, so with that, I'll see you guys in the next video.